Just last week, stock market Meltup stage 1.0 finished up. This was a stage that started in early August and it ended last week. And this is one in which the Russell 2000 small cap stocks went up about 19%. The QQQ, think of that as the NASDAQ 100, that went up about 17 percentage points. And over that time, the S&P 500 made almost a 15% up move. That was Meltup stage 1.0 for the stock market. We are now preparing for Meltup stage 2.0. And I'm going to explain to you exactly how all this is going to play out. A lot of people are not prepared for what's coming here. I want to mentally prepare you guys for what's coming here, okay? Additionally, we're going to speak out about what specific stocks are likely going to do best in this next cycle, because it's not going to be the same way it's going to play out in this next cycle that it did the first cycle. So I want to get everybody mentally prepared so everybody knows kind of what's going on here and what is likely and why it's going to play out. There's one thing and one thing only I need from you guys. I took several hours preparing this video for you guys here today. I need one thing only, and it's to smash that thumbs up button. That's all I need from you guys. Hit that thumbs up button, make it glow. I appreciate you all for joining me as always. Additionally, thank you everybody subscribe to the channel. New all-time high subscribers in the history of this channel. I appreciate each and every one of you guys for being here. Additionally, proud to announce for the first time ever on this channel, we got a massive one-day sale coming. It's going to be Black Friday for 1000xstocks.com. If you have been wanting access to 1000xstocks.com, click the pinned comment down there, put in your name, your email, or your phone number, and we can either email it over or text it over. It's going to be a one-day sale, November 29th, Black Friday for 1000xstocks.com. Once again, that will be pinned comment down there, okay? Alrighty, guys. So, first place I want to start out here. We just got through earnings season. Earnings season is in the books, in my opinion, now at this point in time. All the big dogs have reported. Everybody that you wanted to see reported has reported now, okay? Now, what is extremely important about this, and I mean this is extremely important for everybody watching this right now, you've got to look at, are companies doing better than expected or worse than expected? And this was as of this past week. 75% of S&P 500 companies have reported positive EPS surprise, meaning they beat on earnings per share. 75%, right? 61% of the S&P 500 companies have reported positive revenue surprise. So the fact of the matter is, the far majority of S&P 500 companies are doing what they were expected to do, or things are going even better for them. That's extremely important. And there's a small percentage of companies that are doing worse than was expected when it comes to S&P 500 companies. That's extremely important. So we got through kind of a scary period there where people are like, oh, I don't know what's going to happen here. And that's a huge moment to get through, especially when you're going into year end and you start talking about Santa Claus rally, right? Additionally, the stock that matters the most to the stock market, we now have their earnings report, and it was an absolute banger. An A+. I put it on my X page. I said, you know, if this was a test, Nvidia got a perfect 100% score, and additionally, they got the bonus question right as well. Revenue went to $35 billion from $18 billion. Cost of revenue, went up, but it's like nothing compared to how much revenue went up. So their gross profit exploded to over $26 billion in a 3-month span. So they're basically doing about $12 billion in gross profit per month right now. Per month. From $13 billion in the same quarter last year, right? Operating expenses, they kept that in check. Like research and development was up roughly around 50%-ish, rough numbers there. But like when your revenue is basically doubling up, like that's nothing for R&D to be up. Sales and general administrative was, up a decent amount. But once again, when your revenue is basically doubling, that's nothing, man. So total operating expenses, they kept that in check. Operating income exploded nearly $22 billion from $10.4 billion. They also had other income of $447 million versus $105 million in the same quarter last year. Income before income taxes went to $22.3 billion from $10.5 billion. Net income went to $19.3 billion from $9.2 billion, and diluted EPS went to 78 cents versus 37 cents. Well over a double up. Incredible numbers for Nvidia. Now, in regards to their guidance, they reported guidance that was around $500 million, $400 million to $500 million ahead of kind of where analysts on average were at, right? Which isn't the most exciting Nvidia guide, but keep in mind they might be sandbagging this one. My guess is if they are saying they're going to do $37.5 billion, they probably have $38.5 in the bag. That's my personal opinion in regards to that, right? And there's a potential that maybe they do 39 or 40 billion. So don't get caught up into thinking like 37.5 is what they're actually going to do. They're probably going to come in and smash that overall, right? Now, that's a huge moment for the market because that was a big, scary thing. It's the biggest stock. It's the biggest market cap. And people are like, ooh, if Nvidia doesn't come in with great numbers, like, oh boy, we're in trouble. Guess what? They came in with great numbers, right? They came in with great numbers. And next quarter, guess what's going to happen next quarter? They're going to beat all the numbers again next quarter, right? Guess what they're going to do? They're going to guide higher than wherever Wall Street's at. Like, it's the same game until it's not. And when I talk about it's not, that's probably still a year to 1 to 2 years out, right? We're probably, I would say, we might run into some issues at the end of 2025 or the beginning of 2026. And that's where things start to get a little bit shaky. But for now, party on in regards to that. Now, what about the Mag 7? Everybody talks about this Mag 7. You hear about, these stocks are overvalued, these sorts of things, okay? Listen. If you want to know whether these stocks are overvalued or not, I'm going to take you through right now each of these stocks, and I'm going to explain if they're overvalued or undervalued and why, okay? So you can begin to understand, like, are these stocks actually undervalued? Is this a big risk for the market that crashes the market? But there's no doubt these stocks are what move the market now. Nvidia, you got to be flipping my flapjacks. Nvidia is over 7% of the weight in the S&P 500, over 7% of the weight. Apple's a little less than 7% of the weight. Microsoft's 6.2% of the weight of the S&P 500. Amazon's a little less than 4%, right? If you add up the Google shares, they divide them out by two different companies, Class A and Class C, essentially, right? But they're just around, we can call it 3.9% or 3.8% of the weighting, so roughly around what Amazon is. Meta's 2.4%, and then Tesla's 1.9%. Okay, so let's go through each of these stocks, and I'll tell you if they're overvalued or undervalued. First up, the big dog, Nvidia. Are they overvalued or not? The truth is, in regards to Nvidia, the stock is fairly valued. This is not an overvalued stock. Anybody that says, oh, Nvidia's a rip-off, the stock's very overvalued, they don't know how to run valuations. They don't know how to run valuations, okay? Forward P on Nvidia's, let's call it low to mid 40s, okay? So looking at kind of analyst expectations in general, like forward P would be around 45. Keep in mind, what does Nvidia do quarter in and quarter out? They beat analyst expectations. So my guess is the true forward P on Nvidia is probably 40, 41, maybe 42 on the stock, right? Which is around double up where the market is at in general. Well, here's the thing. Next year, earnings per share growth is expected to be, triple, if not more than triple an average stock. Same thing with revenue growth, right? Revenue growth is going to be like 4x, 5x, if not 6x, 7x what an average stock is. So you got about a 2x valuation there, but you got earnings per share and revenue that are going to smash an average stock. And so you say, well, what if a big slowdown comes in 2026? Fair, and that might happen. But the bottom line is, you can't make a case that this stock is overvalued right now. It's fair value. Like this is right around where Nvidia should be trading at, right? I would say Nvidia anywhere between about 140 and 180 is fair value on the stock. Now, if the stock made a move to over 200, then we can make a case that Nvidia might be overvalued. But here, it's fair value. That's just the fact around that, right? Now, Apple. What's the deal with Apple? So Apple's trading around a 31 forward P. Keep in mind, Apple gets a much higher valuation multiple nowadays because their services business, the money just keeps pouring in. It's really not going to keep pouring in until someday that business model is disrupted, which isn't in the short term, right? Like people are going to keep buying their iPhones and they're going to keep buying their iPads and their Macs and be in that whole ecosystem, right? As somebody that's in that ecosystem. So Apple's not facing any major disruption in the short term. 10, 20 years from now, it may be a different scenario, but right now, no. So forward P 31, right? Next year, earnings per share growth should be nice double digits for them. Revenue growth should be around 6%, somewhere around there, right? So I would say Apple is either slight overvalue to fair value in regards to Apple right now at this point in time, right? What about Mr. Softy, Microsoft? Microsoft trades at a 30 forward P, right? But look at the next year expected earnings per share growth. Should be a nice, let's call it mid to high double-digit earnings per share growth with revenue probably being up 14% plus next year. So when I look at Microsoft, I believe this stock is actually slight undervalue. It is actually slightly undervalued when it comes to Microsoft, right? Now, when it comes to Google McDougal, listen, forward P on this stock's around 20. Next year, expected EPS growth and revenue growth should be, we can call it 10 to 12%, somewhere in there. For a forward P at 20, that's actually decently undervalued. So I would put Google into the medium undervalued category right now. Now, Google is going with, has problems in other areas, like the government looking into their business model, and they have issues, right? But the bottom line is, if you just look at it from a numbers base, The fact is, this stock is actually decently undervalued right now in regards to Google, right? Now, there's 3 stocks I personally own of the Mag 7. One is Tesla, one is Meta, one is Amazon. So, as a shareholder of those companies, do I feel like these stocks are overvalued or undervalued? Let's talk about Tesla first. That's the most controversial one. Listen. Tesla, okay? Tesla is going to be Tesla. Tesla's always going to look overvalued. Always. I don't see any point in time in which Elon Musk is running this company where Tesla doesn't look overvalued. You can look at Tesla's entire public history since this company went IPO, what was that, back in 2010, 2011? Look at it throughout its entire history. It's always looked overvalued. And it's the same thing today. And guess what? 3 years, 5 years, 7 years, 10 years from now, it's likely going to be the same thing again. Until the day Elon Musk leaves this company, it's probably going to look overvalued, right? And that's just a bottom line with that, because people are willing to pay big premiums here because Tesla's always at the forefront of technology. They got an incredible workforce there, and they got a management team that keeps the pedal to the metal. And so the moral of the story is it doesn't matter what Tesla's trading at. It's a sentiment-driven stock. And you can always make a case that it's overvalued. So there's never going to be a case. There's never going to be a time period where you can not make that case, right? I mean, heck, even when Tesla was $101 a few years ago, and I was picking up some shares, down at those prices at the beginning of January 2023. Even then, people were still arguing, "Oh, Tesla's overvalued." I remember certain individuals that were big people on this platform said they were going to buy Tesla when it went to $50 to $60 later on in the year. Those individuals don't post on here anymore, by the way. They were big back then. I remember. Some of you guys know who I'm talking about, okay? Yeah. Meta is actually medium undervalued. I'd put that in the same exact category as Google right now. The bottom line is you look at Meta's forward P, we're likely trading 21 to 23 forward P in reality. And with the growth rates Meta has, and they got the Llama model, you would look at it, if you want to know the company that's benefiting the most, everybody talks about Nvidia benefiting the most because they're selling the picks and shovels, right? And they're like, everybody's trying to see if they can hit gold. The only company that really seems to, there's really 2 companies that have seemed to hit gold in regards to AI outside of Nvidia. Guess what they are? Meta, right? Palantir. Those are really the only 2 companies that I would say, from the ones that are buying the picks and shovels, they're really the only 2 that are actually hitting gold in regards to this whole AI situation. Now, in regards to Amazon, I would say that stock is slightly undervalued at this point in time. Amazon's another stock. It's always going to trade rich. I don't see a day when it doesn't trade rich. The company just has too many growth levers all over that company. They're still, people don't understand, Amazon's still early days in its profit cycle. The earnings per share cycle really is going to pick up steam 2025 through 2035. We're way early days. The earnings per share and the net income in Amazon's posting right now, this is small potatoes, folks, from where that earnings per share and net income is going to be 5 years out, 10 years out, okay? So Amazon, I would actually say slightly undervalued to potentially medium undervalued right now, right? So, listen, the Mag 7. Everybody talks about the Mag 7. Ooh, Mag 7, it's not the scary boogeyman everybody makes it out to be. It's just not. There's none of those stocks I just ran you through that you could make a case that they're overvalued other than Tesla. And once again, you could always make that case in regards to Tesla. None of those stocks. It was not like, those are crazy bubbles. Oh man, all those stocks are going to fall 50%. No, the boogeyman's not there. And the bottom line is, if you had to place a wager, are those stock prices going to be up? If you had to place a wager, let me ask you this, okay? If you had to place a wager, no. You had to put your whole net worth on a line. Every dollar you have to your name. Would you bet that those companies' stock prices, in general, are higher a year from now or lower a year from now? If you had to put your entire net worth on the line, and that was your only option, my guess is you would place your entire net worth, if you were forced to, that those stocks will be higher a year from now than lower. And I bet you that would be the far majority of individuals watching this video right now, right? And so it's easy to say, the Mag 7 has gone up a lot, it's overvalued. Look at the numbers, and you'll begin to understand, no, it's not the scary boogeyman everybody's making it out to be. By the way, I was showing this photo here, and it reminded me the other night, I had assigned 23 six-figure awards. and one 7-figure award. Yes, in my private stock group, we had 23 people hit 6 figures in their portfolios. Incredible. And we had one new member hit 7 figures in their portfolio. So congratulations to everybody out there reaching new record milestones in your portfolio. It's incredible to obviously see that, right? And I said, do I smell Palantir, SoFi, and Tesla? I'm guessing, just a wild guess, that a lot of people are being carried to new record highs in regards to their portfolios, probably from those 3 stocks. Just a guess in regards to that, right? Now, additionally, when you look below that Mag 7, you have other big tech companies that are very large companies, but they're not like that level of large, where we're talking like $1 trillion plus type companies, right? AMD is a good example of that. AMD is usually, what, a 200-something billion dollar market cap, so it's a big tech company, but it's not like those sorts of big tech companies, right? And I did a video, what was that, a day ago or 2 days ago, right? 5 stocks to buy within 30 days. Insane gains coming. And guess what the first stock I featured in that video was, of those 5 stocks? It was AMD. AMD is looking very undervalued. So you have some of these other big tech stocks that aren't technically Mag 7s, but are actually trading very undervalued. I think people that buy AMD stock over this next 30 to 60 days, I think they're going to look back 1, 2, 3 years from now and be very happy they did so. And I mean very happy, and that's why it was the first stock I featured in that particular video. So that's another thing to keep in mind there. Palantir. Listen, Palantir, it might have one final move in it for 2024. And I thought the move in regards to Palantir was done until I heard about the NASDAQ listing. And right, the NASDAQ, the addition there, right, next week. And then the decent probability is going to get into the QQQ, and then it's going to probably be a top 35, if not a top 30 stock in the Qs. Could put a lot of buying pressure in regards to Palantir at the end of the year. So this one, I know a lot of people have kind of thrown in the casket, they've thrown in the coffin 6 feet deep. I'm just going to be honest with you guys, it might have one last hurrah move here at the end of the year. And that's going to be wild if that does play out. But the way I look at it is getting in the NASDAQ and then likely getting in the Qs. I think it's hard for me not to see that stock kind of have one last hurrah kind of epic move there, right? And it was interesting kind of seeing the bears celebrate over the last, day or two about Palantir stock finally not going up. And I'm just like, wondering, what are you guys celebrating, the bears, in regards to Palantir? Like, the stock's up a ridiculous amount, right? I mean, I'm up 667%. Like, that's ridiculous, right? But the other thing I was kind of thinking is it would be funny if Palantir had one final move here at the end of the year and went $70, $75, something like that. It would be hilarious, because all those bears are already so upset with this stock doing what it's done. It would be hilarious just to see one final hurrah move there. But we'll see. But I'm just saying, like, it might have one final move in it here at the end of the year, right? I don't think, if that does have that last hurrah move and goes to 70, 75, I don't think the next 2 to 3 years bode great for gains in Palantir stock. But like, I wouldn't be surprised if it had this one last move here into year end. No, additionally, you have a lot of stocks in kind of that $50 to $100 billion market cap, so we're going to go a leg lower here, that are still very undervalued. PayPal is now a good stock for us, right? Up $69,000 in the public count. And I would say most people that have bought PayPal stock in the last 2 years are now looking very good. And they've made a lot of money on the stock, right? But a stock like this, you still look at the valuation of the company and you look at the earnings per share growth, and it's still undervalued stock. So stocks like this, they're not the boogeyman either. Like, these sorts of companies can still move up as well. So that's something to kind of keep in mind there, right? Now, additionally, you have these sorts of stocks, if we go a leg lower, with these Estee Lauder type companies that maybe are in that $20 billion type market cap range. And these are the sorts of stocks that are actually in a bottoming phase right now. These stocks have been leveled. They got selling pressure on selling pressure on selling pressure on selling pressure on them. It was relentless for a long time. But it's very, very clear that these stocks are now in a true bottoming process. And Estee Lauder fits that category. A stock like Nike fits that category. That they've been going through this vicious end-of-year tax loss harvesting. Just everybody that wants to sell is selling these stocks, right? And that's just what's going on with them. But it's a bottoming phase. It's no fun if you're selling the stock. Like I would hate to be a seller of Estee Lauder right now. Like, geez, that stock was what, $370 just a few years ago? I would hate to be selling at 65. Nike, $73. Oh, I would hate to be a seller here. It's no fun if you're in that selling process. But for people like myself that are now buying these sorts of stocks, like Estee Lauder, Nike, oh my gosh, these are like Like, just give me every share in sight of these stocks right now. Nike's trading a little, $100 billion market cap-ish. Estee Lauder right now trading around a $23 billion market cap. I mean, this is a historic kind of buying opportunity in regards to a lot of these value and dividend stocks. And I've talked a lot about many of these value and dividend opportunities over the last, I would say, few months in regards to the channel. And yeah, I think if we look out 1, 2, 3 years from now, I think we'll be laughing about the days when these sorts of stocks were trading at these sorts of prices. No different than now we look back 2 years later from the tech bubble crash that we had, right, 2 years ago, and when Meta was less than $100, and now that stock's on its way to $700, and we look back and we laugh and like, geez, like, who wasn't buying that dip? And you think about Nvidia, it's moved, 1,000% plus in the last 2 years? Geez, like, these sorts of stocks are not going to produce that level of return, so it's important to understand that over the next 2 to 3 years, but they're still going to be phenomenal return profiles, and you got to take advantage of what the market gives you. In 2022, it gave us, the Nvidias, the Netflixes, Meta, all those sorts of stocks, right? Shopify, it gave us those at joke prices. Like Shopify was $25 a share. Netflix, and now Shopify is $100 plus a share. Netflix went down to, I believe it was 170. Now the stock's, I believe, 700 plus. Like, it gave us these incredible opportunities. And we got to take advantage of that. Like, if you were in position to take advantage of that, like I was, and maybe some of you guys watching this were, you took advantage. And you grabbed those stocks left and right. That was what the market gave us. We took what the market gave us. Now the market's given us these great dividend value type stocks. You take what the market gives you. It's given me these value and dividend stocks that are great companies at 5, 7, 10-year discounts. I got to take advantage of that. I'm going to take whatever you want to give me, market. I'm here to take it. I'm here to take great assets off your hands at great prices. And I'm getting great pricing on a lot of these companies, and I'm going to take every share off the seller's hands as I possibly can over this next few months here. And that's the bottom line in regards to those. And I think we'll look back 2, 3 years from now and be like, that was smart. That was very, very intelligent. Then you got a situation like what happened in Elf, right? Where, the short seller comes out and they basically say, the gist of it was inventory doesn't add up in regards to imports, how much Elf is importing versus their revenues, and they basically said that they believe the company's overstating their revenues, which is just a fancy way of saying cooking the books, and you had all that drama today, and it dropped Elf stock all the way down to $102. Stock closed today at $119, but it dropped it in the trading day down to $102 because the short seller said this. Short seller also, from my understanding in the report, said something around the lines of like they're looking to short most or all of their short, they get out of their short position like ASAP, right? Which is also fascinating, right? Now, ELF is a decent sized position for me. I'm up 1,534% on in the public count. And so I spent about 15 minutes thinking about this. And here's what I came up with. I said, if ELF lied about revenue, I have 2 questions. 1, why are retailers continuing to give ELF more and more shelf space? Retailers don't just give a bunch more space for the fun of it. You're going to tell me Walmart, Target, all the biggest retailers, Ulta, are all going to keep giving ELF more and more space if it's not selling well? What are you talking about? They're only going to give ELF more space if the sell-through is ridiculous. That's the only way that happens. They're in the business of moving product. 2, I said, why would you want to cover your short right now? If it's true, then the company loses all credibility and stock could fall another 50% plus, right? Why cover your shorts now? Fair question. Why cover the shorts now? Did you see what happened at SMCI? If you believe this is another SMCI type situation, why would you cover your shorts now if you truly believe that, right? I said, also, is Nielsen the most respected company in the world for channel data also making up numbers? Point number 3. So this was in the latest quarter, turning to U.S. Looking at Nielsen track channel data. Nielsen's the big company that tracks all the channel data out there, right? Which represents about half of our business. Our consumption trends in Q2 were softer than expected, coming in at plus 16%. So is Nielsen making up numbers for ELF? This is the number 1 most respected channel data company. They're just going to make it up like, ELF, they're up 16%. So Walmart's just making up stuff, and Target's just making up stuff, and Nielsen's just making up stuff, right? I said point 4, international growth is over 90%, while total business growth is at 40%. That means much of the growth is coming from international, and so why would the inventory ever be sent to the U.S.? I said I spent less than 15 minutes on the subject and just punched holes into their thesis all over the place. That's muddy. I destroyed their thesis in less than 10 minutes. I destroyed it like a piece of Swiss cheese. It's ridiculous, man. These guys, how much time did they spend on this? Like, imagine if I spent like 3 hours on this subject, 5 hours. Imagine if I spent a whole day. I destroyed their whole thesis in less than 15 minutes. But, you know, the market does what the market does, right? And I know investors get real upset when this happens. But the bottom line is, if you believe ELF is in no wrongdoing here, right, then, I mean, obviously, you view that as a gift, right? $102 on the stock, and then it settles out the day at $119. You view that as a gift, and if anything, you might be wanting to thank those muddy guys over there, okay? Because that's insane, and that's the market for you, right? Now, additionally, and you know that ELF situation, by the way, that was just a side subject. We're getting back to the whole Meltup 2.0 now at this point in time, but I know a lot of people wanted me to cover that ELF subject, so thought I would cover that, okay? Now, back to the Meltup situation, right? What we're looking at now is United States wages and salary growth. Now, we've been kind of in the 6% type range. This matters significantly because CPI right now is in the 2s. There's very little inflation going on out there now at this point in time. The big, increases in just, everything going wild. You go to the food store and it's just like, oh my gosh, the price has gone up so much since last month or the month before or something like that. And gas prices, all that's gone bye-bye now at this point in time, right? So we got a CPI in the 2s and we got wages and salary growth at 6% plus. So this sets us up in a phenomenal position for the consumer in 2025. And this is why I view real wages getting to their best position in years or even decades, right? So that's going to bode very, very well, I think, for a lot of these companies that have struggled the last year or two, because it's a lot of them, man. Like I understand the Metas and the Nvidias and those sorts of very, very top tier companies have had great numbers the last 2 years. But those type of companies always have great numbers. They always, like when has Meta not had great numbers other than maybe 2022? Meta's always got great numbers. Nvidia's pretty much almost always got great numbers unless they're at the end of a boom cycle in chips, right? Like, those companies are special. Amazon, all those sorts of companies, right? Now, if we talk about the Nikes and the Estee Lauders and all those sorts of companies, they've gone through a lot of trouble in the last year or two. But real wages got destroyed for a lot of folks, right? Really in the back half of 2021, and that ran through all the way into 2023. So real wages got destroyed for about a 2-year span there, and they started to come back here recently in 2024, right? And there's a lag on that to when it starts to really hit. But my opinion is 2025, we're going to see like the best real wage growth that we have seen in years, if not decades, in 2025. Because I'm looking at CPI that's likely going to be coming in 2s for the next good amount of time, right? And real wages got to stay there. And do you know why they have to stay there? The reason they have to stay there is because unemployment's still low. Unemployment's in the 4s. If you have an unemployment rate in the 4s, right, and you got CPI in the 2s, there's just no doubt that real wages have to go up quite considerably, which is why we're seeing this sort of wage growth. And so even if we saw, and keep in mind, the wage growth of folks is usually much bigger than, or excuse me, the wages somebody makes are much bigger than what a CPI category would go up over time, right? And so this is going to bode very well for a lot of those consumer brand companies next year, and I think a lot of people are going to start to really understand this in the beginning of 2025, right? Now, additionally, this looks at S&P 500 monthly returns 1928 through 2023. What we're going to find is, if you look at this here, we're going into 2 banger months, right? The December returns on average are around 1.31%, and then January is around 1.16%. And you got Santa Claus rally that usually happens in December, just a very euphoric feeling in the market, right? Earnings season's over, you're not really getting any big economic data. The market can just drift higher, everybody's out there spending, it's just a good vibes, right? And that's why we see so many times the market do very well in December, right? And you get that Santa Claus rally. And then January comes along and you get January optimism. And this year you could have that taken up to another level because we also have a new administration coming in office, right, in January. So that could lead to even more optimism in January because it's like, oh, we got a new administration coming in. And, just generally speaking, you get that January optimism as well. So that's something to kind of keep in mind there. We're going into 2 banger months. No, I wanted to kind of look at some other data here. And so this one looks at market monthly returns 1980 through 2018. So a little more recent data. And we're going to find December up 1.11%. In January up 0.82%. So looking good as far as that goes. And then I said, okay, what about since I've been born? I was born in 1989, right? I'm an 80s baby, barely made it, 1989. And so I said, okay, what about 1989 through 2023? How'd the market do? And what I found was we had 27 up years in that amount of time and 8 down years. And the average return in December was 1.26%. So the moral of the story is, if we want to just kind of look at, since I've been born, it was more likely than not the market's going higher in December, right? Not a guarantee. You did have 8 down years, but you had 27 up years. So last time I checked, that's what, a 3-to-1 ratio there? 3-to-1 ratio? Now, if we look at January, 21 up years and 14 down years. Average return was 0.41% up. So once again, the odds are stacked in our favor in regards to January as well. So Santa Claus rally could be on deck here with January optimism then coming in, right? Now, additionally, what we're looking at now, you want to pay attention to this red line because that was an open field election year, right? So basically, a lot of times, right before the election, right after the election, you actually can have the market downtrend a bit, which is actually, we had that initial kind of move up, but then, we kind of had a move down here in regards to the market. But what you're going to find is you basically have an epic rally that starts around the last week of November and runs through to the end of December. And it's usually a pretty epic rally. Once again, these are no guarantees that it's going to play out how it usually plays out, but you stack these things together, and sometimes these become a self-fulfilling prophecy. People are like, hey man, the market usually runs huge, I'm going to buy. And then somebody else looks at it and like, I'm going to buy, and I'm going to buy. And next thing you know, you're in a situation where it becomes a self-fulfilling prophecy because everybody believes the market's going to go higher based upon all the data, Santa Claus rally, January optimism, with all the historical trends, and then it creates the same situation that happens every single year, right? So that's something to kind of keep in mind there. And then you could have fund managers chasing the market into year end, which just adds crazy fuel to the fire. Crazy fuel to the fire. And speaking about more fuel to the fire, oh my gosh. We just surpassed $7 trillion in money market assets. That's insane. If you want to talk about more fuel to the fire, this is insane for 2 reasons, essentially, okay? The first reason this is so insane in regards to money market funds going 7 trillion plus is people will look at this, right? My phone's running low on battery. Thank you for letting me know that, Apple computer. Was that Apple intelligence? The first reason this is huge for the market, the $7 trillion plus on the sideline, is this gives the market a lot more confidence. There's no shortage of money out there. If you get any major drop in the market, you could easily have money come out of those money market funds and into stocks. There's no shortage of money. And I mean no shortage at all. Secondly, if you think about it from this context, right? If you had a bet over the next year, are you likely to make more or less from, let's call it CD accounts, savings accounts, from treasuries, or more? I think that there's a pretty high probability you're going to make less money from those, which if you're making less money from those, what happens? People got to start coming to the stock market to start looking for returns. People start paying attention to value stocks again, dividend stocks again, right? Some of the Mag 7 type stocks again, right? So when we're talking about $7 trillion is over there, that's no shortage of money. And so this is more fuel to the fire for this market here in the short term, right? Additionally, we got to address the elephant in the room. The elephant in the room is Trump won the election and Biden's about to go out, right? Now, the reason that matters is there's a lot of retail investors that did not and refuse to basically invest, especially in any aggressive manner, under the Biden administration. And there's a lot of people, and I can see it. I can see it in the numbers. Since Trump won, there's a lot of people that did not want to invest under Biden, right? And so you just got to understand there's going to be a lot more money coming likely into the market because people are going to feel more confident about investing under Trump than Biden, right? And those people usually have very, very strong feelings. And so this is something that matters significantly. Now, The moral of the story is in regards to this whole situation, though, in regards to, not wanting to invest under one president, but only wanting to invest under your guy or your political party or things like that. Don't ever can do that again. Don't ever make that mistake. Don't ever make that mistake. I could have sold out of the market 2 years ago when it was doing bad, and I could have said, you know what, inflation's high, Biden, he doesn't know what he's doing, I'm going to wait till a new administration's in, right? Oh my gosh, would that have been a mistake? The public account was around $1 million 2 years ago. And with minimal deposits over the last 2 years, it's now $2.7 million. Then you add up my other portfolios. I've made millions of dollars over the last 2 years. Millions. Imagine if I said, you know what? I can't invest under Biden. Like, could you imagine that? Crazy. Don't ever make that mistake again, guys. I don't care if your guy, your political party's not in office. Invest, invest, invest. I've shown many charts on my channels many times over the years showing you how the market does under Republicans, Democrats. And guess what? Many times, doesn't matter if there's a Republican or Democrat in the office, the market's going higher. Every once in a while, it can flip and it can go the other way, but it's very few and far between. So don't ever make the mistake that so many people made, right? But the moral of the story is, now that, a lot of folks, man's coming in office, there's going to be a lot of optimism in regards to that, and there's going to be a lot of people that want to put money into the market. And so we'll see how all that plays out, but just keep in mind that does add more fuel to the fire in regards to kind of, the move 2.0 we're talking about here today, okay? Appreciate you guys joining me as always. I hope you really enjoyed this video. I hope you got a tremendous amount of value out of this 36 minutes. Let me know in the comment section if you did. I hope it was a banger for you. Additionally, pin comment down there here today. That is going to be to access the one-day sale we're going to have November 29th. That's going to be on Black Friday for 1000xstocks.com. So many of you guys have wanted access to that. That's going to be your big deal. Pin comment down there, enter in your name, your email, and if you want it sent over via text on that particular day, because I know not everybody checks their email all the time. It's a one-day sale. So if you miss a sale, it's done. So if you are really serious about it, you want to take advantage of the sale, I would enter in your number as well so you can likely get that, because I know people's email inboxes are a spam mess, right? So do keep that in mind. And if you come to me a day after and say, I didn't get the sale, okay, too bad, so sad. That's on you. That's not on me. We're going to have the 24 hours. It's going to be good for 24 hours. You don't get it, regret. That's on you. That's not on me at that point in time, okay? Alrighty, guys, much love as always, and have a great day.